Strong order accretion in the first half of the year props up L&T, which now boasts an order book of over rupees 5 trillion. The company holding on to its FY25 guidance also infuses confidence.
Cipla has received a green signal for its Goa unit from the US FDA, clearing the way for it to launch the 700 million respiratory drug Abraxane much ahead of the expected timeline. The unexpected boost fires up the stock.
French IT consulting major Capgemini cuts its 2024 guidance after a weak quarter on continued weakness in its manufacturing vertical. This is the company's second downward guidance revision after a cut in July, has an impact on Indian IT stocks. You're watching us here on Halftime Report on CNBC-TV18 from Hormaz. Me, the entire team of CNBC-TV18 from these glittering studios. We wish you, your family, your loved ones, all your colleagues a very, very happy Diwali. Love, happiness, peace, prosperity, most importantly, good health. Hormaz, wish you as well.
Wishing you and your family a very happy Diwali as well, Mangalam, and absolutely that is what you would wish for. What more could you ask for other than good health, happiness, and of course lots of food and travel?
I guess secondary. Bulls would say a little more respite from the sell-off that we've seen in October so far. But, be that as it may, the market will continue to do market things. After having seen 4 consecutive series of gains, the Nifty is now pulling back. The last 3 days were decent, where we saw some recoveries from the low point. But yesterday and today, there has been some sell-off from levels of closer to that 24,500 mark. So maybe some sort of range-bound moves continue for the market ahead of the big events that are lined up in the month of November as well. But that's not to say that there aren't many stocks which are gaining. In fact, if you look at the advance decline ratio, you will have more stocks advancing than the number of stocks which are declining. So portfolios would be feeling slightly better today than what they were earlier itself. So you have 1,500 stocks in the green for about 930 stocks in the red. And one of the biggest gainers today is Cipla, among the top gainers on the Nifty as well. The US FDA has given its Goa facility a voluntary action indicated nod status. What this basically means is enables them to go ahead and launch some niche products from that factory as well. For more details, we have Vinny joining in. Vinny.
Good afternoon. Yeah, surely a happy Diwali for Cipla, because this is a very big positive move, and that's why the stock is buzzing in trade as well. Goa facility, why is it so important? Because there were some of the drug launches they were planning that had been pushed because of those restrictions that were there, and we still not got a clearance from the US FDA. So now this clearance coming in, voluntary action indicated for this facility is a big positive. The drug mainly that they will be focusing on and want to launch specifically from this and will be manufacturing in this facility would be the generics Abraxane, and this Abraxane is a drug that is used for chemotherapy drug for treatment of cancer. Currently, the market size of this is around $700 million. So for Cipla, this could mean an annual basis sales of around $70 to $90 million that could start coming in once this launches actually come up and once it's planned. So yes, surely a big positive. Analysts also are quite positive on the stock now. They said that there could be a 3 to 4% upgrade in the EPS target for FY26. So keeping an eye out on Cipla today, buzzing in trade.
10% higher is Cipla, the top gainer on the Nifty, and indeed a happy Diwali for the stock. But what is also having a very happy Diwali today is L&T, and that is after its second quarter numbers that were reported after market hours yesterday on expected lines. But there were a lot of positive takeaways from that, and Vivek is here to tell us all of those takeaways. Vivek.
Well, that's right. So going into Q2 results, there were quite a lot of worries. Number one, the main worry was the fact that the order inflows are something that analysts were anticipating would not be as strong, because the ordering momentum in India was quite muted, and along with that, ordering momentum in West Asia, given the fact that Saudi Aramco had tapered and moderated quite a lot of capex, was something that was weighing down as far as sentiment was concerned. The other major worry, of course, was the core P&M margins significantly trailing what the company had alluded to earlier. But yesterday in Q2, both in terms of delivery, in terms of order inflow, and also in terms of guidance, a lot of the analysts' concerns were assuaged. First up, let's have a look at the core projects as well as manufacturing margins. Came at 7.6%, missing estimates, but still it's up 20 basis points on a year-on-year basis. company maintained its guidance across all of the key parameters, include the margin guidance. So given the fact that they continue to see 10% order growth on a very high basis, something that the street continue to like. Order inflows for H1 surprised on the positive side. Analysts were anticipating a much more tempered outlook as far as orders were concerned. That is something that surprised positively. Guidance for all key parameters, including top line growth, order inflow guidance was maintained. Order book currently is very, very strong at almost 5.1 trillion rupees. And along with that, a significant change in strategy coming in as far as L&T was concerned in terms of bidding for thermal power projects in India is concerned. They would now be selectively bidding for the BTG projects as well, of a lot of the thermal power projects that will come up for bidding is concerned. And this is something that the street likes. No wonder then L&T is doing very well in the session today.
Take that point. Thank you, Vivek, for that. With that, we'll slip into a short break. Come back. We'll focus on Paras Defence and Manappuram Finance as well. Both of them buzzing in trade today. Stay tuned.
Welcome back from our glittering studios of CNBC-TV18 as we wind down on Samvat 2080 and bring in the new year as well. Plenty of stocks buzzing in the broader markets today, and Paras Defence is one of them, and that is gaining on the back of recent news flow and after the company delivered a healthy second quarter as well. Upasana is joining in with more details.
Well, the company has received 42 crore worth order from Ministry of Defence. This is mainly for the supply of 5 types of electronic control subsystems used in thermal imaging fire control systems, mainly to Indian Armed Forces. Now, let's go through the company's consolidated order book. As of March 21, it stood at 215 crore, which the company has increased to 870 crore as of August 2024. Now, company has also given an order book guidance that it will be around 2,500 crore by FY28. Now, let's see how that pans out. Now, in terms of quarter results, companies delivered a strong quarter this time around. Revenue stood at 87 crore with an uptick of 43% on a YoY basis. And this strong revenue growth was led by optics and optronic systems at the company's segment. Now, EBITDA stood at 22 crore with an uptick of 46%, and margins also expanded sharply by 70 basis points at 26%. Coming to company's PAT, that also saw a healthy growth of 46% and stood at 12.7 crore. So all in all, good set of numbers and a good order win by Paras Defence.
All right, a good set of numbers, good order win by Paras Defence. But one of the arms of Manappuram Finance has, reported worsening in credit quality, and as a result of which we have the stock, which is lower by almost 3.5%. Abhishek joins in with the details on that one. Abhishek.
As seen with other lenders wherein the microfinance portfolio is showing pain, it showed pain in Ashirvad Microfinance numbers as well. Now remember that Ashirvad Microfinance is a subsidiary of Manappuram Finance, and that is why Manappuram stock is under pressure in trade today. So NII growth was 25% YOY and about 3.5% sequentially. This NII growth is lower than the loan growth that they have reported. Hence, net interest margin might have come under pressure both YOY and quarter on quarter. The provision spiked up by nearly 122% YOY and about 19% sequentially on account of the fact that asset quality deteriorated for them. They reported a PAT of 75 crore, which is a decline of 36.5% YOY and about 25% sequentially. The on-balance sheet loan growth momentum has been strong at about 56% YOY and about 5.5% sequentially. Remember that in October, RBI has banned them from disbursing and sanctioning of new loans, which could actually put pressure with respect to the AUM growth in Q3 FY25. So their asset quality has deteriorated. Gross NPA ratio has inched up to 4.34% versus 3% in the previous quarter, and net NPA ratio has inched up to nearly 2% versus 1.4% in the previous quarter. Back to you.
All right, Abhishek, thanks a lot for that. With that, we'll take a short break. Come back on the other side. Manish Hathi-Ramani of Deen Dayal Investments joins in with some trading strategies. Stay tuned for that.
Back with us here on Halftime Report. The Nifty continues to trade with losses of close to 100 points, predominantly dragged by IT names. The Nifty IT index is the top sectoral loser in today's trading session, trading with losses of over 3%. All 10 constituents of the Nifty IT index currently trading with losses. The Persistent Systems is the top loser on the Nifty IT, down almost 5.5%, followed by other mid-cap IT names like Coforge, Emphasis, L&T Technology Services, and large-cap IT is not far behind either. TCS, Infosys, all of them in the red, trading with losses of anywhere between 2.5% to 5.5%. That is the big sectoral loser in today's trading session, is the IT index. The other stock that I wanted to highlight, though, was 5-Star Finance. That stock was down 13% in yesterday's trading session after the management had cut its AUM growth guidance for the year. Another 8% shaved off today, almost 20% down in 2 trading sessions is 5-Star Finance. But the big event for the day, other than Diwali, is the monthly expiry for the Nifty. And Mangalam, how's the setup looking like on the F&O side?
The setup is looking like just the way the series was. You know, it was a weak series and we're at the low point of trade as well. So that's exactly how it works out. And not every Diwali has to go to the Bulls, right? Some go to the Bears as well. So maybe this time Bears are saying happy Diwali instead of the Bulls. But Bulls over the longer term would be a lot happier because, you know, even as the Nifty is down about 100 points, the Nifty Bank 180 points, slightly outperforming the Nifty out there, but largely in line as well. The mid-cap index is lower by 0.2%. It is the Nifty October series expiry today. And in doing so, what it'll do is it'll break a 4 series gaining streak. If you just take a look at, you know, the market from June itself, it's been on this tear. June 6.9% on the Nifty, followed by 1.5% on July. 3% add to that, and then September one step ahead at 4.2% as well. So you saw a big move. So at some point a decline was warranted. Now so far in the October series, the Nifty is down about 7.5 odd percent as well. With this decline which is currently taking place, you know, a lot of the call writers have become active once again at the 24,300 mark and the 24,250 mark. Remains to be seen whether we cross past the 24,250 to 24,300 sort of resistance zone, which the option writers are pegging at. But importantly, there is some support coming in that's closer to the 24,200 put. Why do I say that? Because there is action on the 24,200 put, a fair amount of open interest of nearly 2 crore shares. And remember, over this entire week, the Nifty's range has been pretty well defined, 24,150 to 24,500. Why do I say that? Monday's low was 24,135, Tuesday was 24,140, and yesterday's high closer to 24,498 from where the decline actually began. All of this setting us up for all the big triggers which are there in the November series. You know, you have the US elections, locally you'll have Maharashtra elections, an important state for the nation. You have US Fed meet outcome that will happen as well. Then the China NPC, all these eyes between India and China, because last month China has been doing extremely well. And then most importantly, the remainder of Q2 earnings. A large part of October series selling also came in from no respite coming in from, you know, the earnings this time around. There were weak earnings that have come in, and the stock prices had priced a lot more in as well. With the FI selling, all of that combined together, we saw a bit of a decline. But now it seems like, you know, with a 7.5% cut, the question to ask is, where does it stop?
Where does it stop? Indeed, we'll ask that question too. Manish Hathiramani of Deen Dayal Investments is joining us on the show. Manish, good afternoon. Firstly, wishing you, your family a very, very happy Diwali. Where does this stop, as Mangalam was highlighting, right? Manish, we have come down from levels of 26,300 almost, now down to 24,200. It's been a series of losses, is this October series. What is lined up for the index in the November series? What's the setup on the charts looking like?
Good afternoon, Mangalam, Hormuz, and a very happy Diwali to you as well. I really hope that this coming year is very good for all the traders and investors alike. Coming to your question, I feel 24,150, 24,200, this is really the key trigger point for the short term. We have been trying to build up, we have been trying to cross resistance levels, but we haven't been able to. 24,500 to 24,650. This is 150 points on the upside that I would be closely looking out for. We will be out of this bearish woods only if we can cross a closing of 24,650. Until then, if we are able to break 24,150 again, this will take us down to about 23,850. What we need to be very cautious about for the November series will be the low that was recorded on 5th of August, which is 23,890. A breaking of 23,890 can bring us down to 23,500.
All right, and Manish, you got to give credit to you because you called out a big decline on the Nifty already, specifically of Reliance. I remember, pre-bonus when the Reliance stock was little around 3,000 rupees. You had said it can go all the way down to 2650. Lo and behold, we are close to that. If you adjust for the bonus itself, 1339, and due to that, you'd be closer to that 2700 mark itself. Your thoughts now? You said that there is support here. This is an important level for the market. Individual stocks, what are you backing now?
Well, I continue to work with two sell calls. The first one is on Infosys for a target of 1725, stop loss of 1845. The medium-term support of 1785 has broken on the back of very good volumes. The threat point again over here is the low of 5th of August, which is 1718 to be precise. The second sell is on HPCL, target of 350, stop loss of 405. Large blocks of volumes have broken the support of 430 and 395. The stock has also broken the low of 381, which had occurred on 8th of October.
You want to revise your target on Infosys because you said 1725 is your target with 1845 as stop loss. As we look at it, the stock is at 1750. That leaves you only 25 rupees on the downside, whereas the stop loss is a lot higher.
Unfortunately, Hormuz, we've already broken down since I actually prepared this particular stock for today's show. However, 1725 would be the next support. So the only way to trade this would be to wait for a bounce. If we can get a bounce and the target is still not achieved, we can short at higher levels to make a good favorable risk is to reward.
All right, Manish, thank you so much for sparing time and joining us today. Wishing you a very happy Diwali and festive greetings as well. Manish Rathiramani there of Deen Dayal Investments. Two sell recommendations from him, Infosys being one and the other one being HPCL. Now, the pace of decline in earnings is quite alarming. However, the slowdown is temporary. That is the word coming in from market veteran Ramdev Agrawal of Motilal Oswal Financial Services. Meanwhile, Navneet Munot of HDFC AMC says that while there is some earnings slowdown seen, balance sheets are very healthy. Kotak Mahindra AMC's Nilesh Shah also comments that valuations have taken a bit of a correction. Take a listen in.
The pace of decline in the earnings is quite alarming. And their estimate this for this quarter is just about 6-7%. Even if you see the business standard aggregates, it's just about 6-7%. And so we are not seeing too many bright spots in the earnings side. Markets are at all-time high. So, these are two. See, market is also dull, dead, 12, 13, 14, 15p. That matches, But right now, market expectations are running at more like 15 to 20% kind of earnings growth. And here is a market which is kind of, and supply is building up.
Last couple of quarters, everything goes up. Good news, not so good news. Good result, not so good result. But market just goes up. The stock just goes up. I think it will change now. And people will start looking at the fundamentals again, which is a good thing. Even now, after the correction, there's part of mid and small caps where there is still froth. Even at this valuation, they haven't become so attractive that you just go close your eyes and go and buy. I think so. It's good that sanity is coming back.
We know where the valuation is. Is it cheap? Is it expensive? Markets is like pendulum. Kabhi idhar, kabhi udhar. So I have no idea where markets will go. But I know now valuations have corrected in many cases. And it's time to look at stock on a bottom-up basis.
All right, interesting conversation out there from the market masters. Take a short break, come back, promise you another interesting conversation. This one in the management of Somani Ceramics. Abhishek Somani, the MD and CEO, joins in. You're watching us here on Halftime Report, and we're talking on Diwali Day. Let's get in a couple of managements as well. We have Somani Ceramics, reported a soft set of second quarter numbers. Of course, the first half was a bit of a washout because of extended rains, weather not supporting, and the first quarter itself had the election. So we do have management joining in. Abhishek Somani, the MD and CEO of the company. Abhishek, first up, wish you, your team, your family a very happy Diwali from all of us here at CNBC-TV18.
Likewise, happy Diwali to all of you.
Hope that the festive season brings some cheer as well, because, it was a near washout in the first half of this year. what are you looking at in terms of green shoots coming in from the second half? Do you still maintain, for starters, your guidance? You had targeted what? Low double-digit revenue growth in FY25, fueled largely by volumes. I look at the first half, it's absolutely flat.
Yes, we've only grown by like almost just about 1%. And the first quarter was a negative. The second quarter, we covered some ground. But you're absolutely right. And I think we have revised our guidance to about a 6 to 7% growth overall, which means that we would do a double-digit growth in H2. The green shoots are that October has started well. And this time Diwali being early, which is today, I think the next, November, December and onwards to March is a clean 5 months, which we will get. We're also doing a couple of product launches, which should help augment some volume. But the first half has been a surprise. Incessant rains across the country and various other reasons why the market has been slow. But it's been slow across the segment. All building material has been slow. From that point of view, we're okay. We're not that bad. Our sanitary ware segment has done better than the tiles. Not as per our expectation again, but slightly better. But the other green shoots are that the margins are maintained. Raw material prices are maintained, both gas and also in terms of other raw materials. So at least there is some respite on that end.
Abhishek, good afternoon. Thank you so much for joining in. Festive greetings to you and your family and your team at Somani as well. I wanted to ask you about your margins, right? From almost 10%, you're down to 8.5% in this quarter. What is the kind of margin picture that you're working with in the second half? Are gas prices now coming under check? And is there a risk that you see to the margin profile going forward as well?
Our margins greatly depend on capacity utilization. And as you can see that we have had a very, very muted growth in the first half. Our capacity utilization on a console level is down to 77%, which used to be close to 80-something% last year, same time. So it's down about 4 or 5%. And that's impacted the margin. We have been able to, get some tailwinds from the more value-added segment. But on the other hand, there's been pressure on discounting. So towards the month ends, both in June and then in September, there's been an extra discounting. But that's had an offset with the added value-added product which we sold. On the gas pricing, no surprises. Gas pricing remained pretty much range-bound. Going forward, also, we don't see the gas pricing going up. If you can see, we're linked to the Brent, which is down, which is around the 72, 73 range, if I'm not mistaken. So margins, if my capacity utilization go up, which it should in H2 for sure, which means that we're looking at 1% to 1.5% increase from where we are today. So we should be able to get to that 10%, 9.5% to 10% mark by the year end. And we're pretty confident that our capacity utilization will go up.
All right. Would you have a number on the capacity utilization? Because 77%.
Yes, absolutely. We should be in the mid-80s for H2, if not more.
On your faucetware, the capacity utilization out there is upwards of 100%. Are you considering adding more capacity out there? And what proportion of your revenues now are coming in from sanitary ware and faucetware?
So this year would be approximately 300 crores from sanitary ware and faucets. And in faucets, we don't need more capacity. We're running, we can always increase the shift to double the production. So we have more than enough capacity for at least the next 18 months in the faucet.
And are there any plans to increase your own manufacturing, Abhishek? Currently, around 28% of your sales mix with joint ventures and others forming a majority of it. Is there a plan to take that level higher as well?
So we produce about 60-something% on our own, 65%. But I think the last expansions which have taken place, which has not been utilized, that's at 77%. So from that point of view, I think we have enough capacity to take this up to 70%. So we've added 500 crore rupees of expansions in the last 30 months in brownfield and greenfield. And now it's time to start utilizing them. The minute we start utilizing them, margins go up, top line goes up. Fortunately, none of this expansion has come at any balance sheet pressure. So we are still a net debt-free company, even after the investment. So looking good, looking positive. And we're in a sector, like they say, that houses are going to be built. And fortunately, we're replacing a lot of material, a lot of natural stone, wood, etc. So we're looking good.
Okay, good. No worries about that, despite the first half, as it were. That's nature of the beast, Just a final question before we let you go. You did say that you did see an impact coming in on account of the first half, but that was offset by increased value-added products. The last time I spoke to you, you said GVTs were close to around 36% of your sales. You were trying to take it to 40%. What's the target here now? Where does it stand?
We are at 38, so we've increased it by 2%. And if it would not have been for such a tepid, very muted demand, we would have been at 40. So I think we would cross 40 by the year end.
We cross 40 by the year end. Take that point, Abhishek. Thank you so much for joining in. Wish you once again a very, very happy Diwali and a prosperous year ahead as well. The management there of Somani Ceramics cutting its growth guidance for FY25. That's the bigger takeaway. The stock currently doing precious little at the flat line at 651. Well, time for a short break here on Halftime Report. But before we do that, as CNBC-TV18 celebrates 25 years of excellence, we invite you to the most anticipated event of the year, the CNBC-TV18 Global Leadership Summit, bringing together visionary policymakers like Finance Minister Nirmala Sitharaman, RBI Governor Shaktikanta Das, industry leaders like HSBC India's Hitendra Dave, Kotak Mahindra Bank's Uday Kotak, and trailblazing startup founders. This is where the roadmap for India's next 25 years of growth and global leadership will be charted. You do not want to miss this. Welcome back. And auto sales numbers for the month of October will be released tomorrow. And Sudarshan is here with the key expectations of that. Sudarshan.
It's going to be an interesting month for these auto companies. When they report sales for the month of October, this will also have the numbers that they have received during the festive season. So overall volumes for the month of October are going to be mixed, with two-wheelers and tractors are expected to see a growth, and passenger vehicles may see a flat performance, whereas commercial vehicles may see a decline. Retail festive demand is going to be healthy for two-wheelers, followed by passenger vehicles and tractors. Now talking about segment-wise, first about two-wheelers. Growth is seen in the range of 4 to 20%, with TVS and Eicher Motors are expected to outperform, whereas Bajaj Auto is expected to underperform the peers. Now talking positives about two-wheelers, first, retail festive demand is best amongst all the segments. Retail festive growth is seen somewhere in the range of 10 to 12%, and one more positive is rural growth continues to remain healthy. And if we talk negative, that is urban growth continues to lag the rural. Now coming to passenger vehicle, retail festive growth here is seen around 6% for the industry, with Maruti and Hyundai may see a decline in total wholesales, and M&M is expected to outperform the peers. And for Tata Motors, weak commercial vehicle may weigh on the overall sales. Now if you talk negatives about passenger vehicle, first, it has a high base. Second, here also urban growth continues to lag. And third, these companies have been providing major discounts due to competitive intensity. And now if you talk positive, it is second half of the festive season has been much better than the first half. Coming to commercial vehicle, Ashok Leyland may report a decline both MOM and year on year, and negative here is decline on high base for cargo vehicles, and positive is EV bill generation has been higher than the last year. Last one is tractor. Here we are expecting a flat performance year on month basis. Growth may be in double digits. If we talk positive triggers about tractor, there has been improving farmer sentiment on surplus rainfall, and there has been better kharif production. So overall for the month of October, we are expecting a mixed trend where two-wheelers may outperform other segments.
All right, with that, we'll take a short break. Thank you so much for that, Sudarshan. On the other side, we will have Manisha Gupta, as always, join in with all things commodities. With her would be someone from the jewelry business, Amarendran Vumidi of the Vumidi Bangaru Jewelers. Well, seems like this sell-off is intensifying for the market now. The mid-cap index is down over 1%, and the sharp sell-off is what we've seen in the last few minutes on the Nifty as well. The mid-cap index, there you can see, it's a swooping decline to the low point of trade. The mid-cap index, apart from that, we have the Nifty Bank. You know, when we started the show, it was the Nifty Bank which was falling less than the frontline indices. The Nifty was down 0.4% with the Nifty Bank down just 1/3%. Over the last 1 hour or so, the Nifty Bank has increased its underperformance, currently down by almost 1% with the Nifty, which is struggling to hold at that 24,200 mark. Remember, the bulls were hoping for some support coming in at 24,250, but turns out not. There is a lot of put writing at 24,200. Let's see where we go. The Nifty Bank has dragged the Nifty lower, with HDFC Bank seeking lower levels. The IT pack has always been lower in today's trading session itself. So the first big casualty of the day so far has been HDFC Bank, with a cut of almost 156 points on the Nifty Bank itself. But that's it about equities. We have with us Manisha on this joyous occasion, taking us through all things commodities. Manisha, gold, silver, precious metals, what do you have?
Oh, well, all of that actually. There are so many options for consumers to buy this time around at Dhanteras and Diwali, and there are record weddings waiting to happen in November, December and onwards. And that would tell you that we are looking at strong demand continuing for gold and silver, even at these all-time high levels. Joining us to discuss that further is Amarendra Vumidi. He's managing partner at Vumidi Bangalore Jewelers. Anandran, hi. Thank you so much for joining us. What has been your sense with all-time high gold prices? How have the jewelry sales panned out for this week, particularly?
This week, and first of all, thank you very much for having me here. And this Diwali has been, like all other Diwalis, has been wonderful. There was a slow start, but like you asked, for this week has been one of the most fieriest weeks for us. The sales have been extremely good, unlike what we had expected. We thought will be a dull season, but towards the end, it made up for all the dull weeks that we had, and we probably are at least 15 to 20% higher than what we did last year.
Amarendra, and what is it that people are buying? Because with the way the prices have been rising, is it more to do with bridal jewelry, or would you say people are buying more of gold as in sense of investment and wealth creation?
People are buying everything gold this time, though. You know, it's a tradition to buy gold for every occasion. From the child is born, for every occasion, people buy gold. And Diwali is a typical gold buying season. So people are buying bridal jewelry, buying occasional wear. And typically for Diwali, there's lots of parties happening in the town. You know, at least 10 days before, there are lots of parties happening. So people are buying party wear. The wedding season is coming up, so people are starting the wedding purchases. This season, we believe, is going to be a good season for us.
Amarendran, you said 15 to 20% of a surge this Diwali as compared to previous. What kind of buying trends have you seen?
This time, we've seen a lot more of the lighter weights. People are buying more pieces than larger pieces. So although the ticket size has come down, but the number of tickets has increased this time.
And even as there is a lot of buying, would you say that it is more about gold jewelry, or would you say studded and polkis and jadaus, diamonds, all of that seems to be doing well too?
All categories have done well this time, surprisingly. Diamonds have done really well since there was a drop in diamond prices. So people found that to be a little bit more attractive than the other commodities. So people have bought diamonds. Silver has gone up, so silver also has done very well. All of this, people buy with the belief that, you know, their investments are good. This is the only sector, the investment that the woman makes, and she has always been right, because for so many years the gold has only gone one direction.
Well, yes. Amarendran, you know, when it comes to the overall country, we do see South actually leading by far with sense of numbers that is bought in sense of gold or jewelry for that matter. And then comes North, and then West, and then East in some sense. How have you seen this play out this time around as well?
I don't think so. The trend has just changed. It's still the same. South still leads. The markets were absolutely chock-a-block this time. Everybody who I spoke to have expressed the same sentiments, said that gold has done very well, and they are all very happy for the season.
So you're saying that all-time high prices have not deterred buying at all. Would you have a sense of also on what kind of buying has happened in sense of quantity in this week until now, and what are the expectations? Because a lot of people that we are talking to tell us that 42 tons of gold was sold the previous time it was Dhanteras and Diwali. Are we looking at similar numbers this time around as well?
I think the market should have done at least 10 to 15% higher. So if last time was 42 tons, I think we should be around about 50 tons this time around, and not lesser.
Okay, all right. Amritan, also going forward, because it is the wedding season, are there any new launches that the street is looking at? And also, is there a lot of competition into the market? Because a lot of people that I spoke to tell us that there are offers and schemes and monthly deposits as well. And there are various ways that jewelers are trying to do businesses. What's your sense?
I think offers is a very good way because the first 2 weeks, were a little bit slow. So the offers started to go up, and then once the offers started to kick in, then the crowd started to flow. So I mean, there's no other best way to get a client than giving an offer, and world over, people love a discount.
They do. Amritan, a final thing then, as compared to last year, what kind of penetration would you see in case of diamonds? Because yes, the prices have corrected almost 20% from the highs that we saw in the previous year. So what kind of an increase in growth and sales have you seen in that one?
Diamond has seen quite a robust growth. There's almost a 30 to 35% growth in diamonds. And we expect this to continue. And if this continues, we can expect the diamond prices to stabilize a little bit. So we feel that we are stocking up for diamonds, and we are pretty bullish on the diamond market. Despite there's a lot of talk about other diamonds, of man-made diamonds, but still has hardly impacted the natural diamonds business at all.
Oh, well, absolutely. Lab-grown has its own market, but natural diamonds has a lot of takers. Continuing, a final question, then I'll squeeze in one more here. What's your sense on the gold prices going forward? Where do you see the prices now until next Diwali?
I think even a layman can guess this. It's only one way. So with the added geopolitical tensions, I don't think there's any other direction for gold. Only up.
Amrendra.
I trust a jeweler to always say that gold prices are always up, right? Thank you so much. Wish you, your family a very happy Diwali as well. And if you say that gold is going to be up, then perhaps it is, because all Indians in some way or the other do have their savings in gold itself. Can't say the same for the IT index though right now, Manisha. It's at the low point of trade right now as we look at it, it's being a big drag on the index. Yes, the Nifty bank is lower, but just pull up the IT index. You have a big cut coming in from what? Infosys currently at the lower end of today's trading range. We have Tech Mahindra, which is down nearly 5%. TCS is the other one, which is down about 2.5% as well. So the IT index on the whole has now seen a cut of almost 3.5%, a little over 3%, has been a big drag on the index for most part of today's trading session. Just over the last few minutes or so, we had the Nifty bank that did decline. But for IT, those who are just tuning in, we just reiterate, all the IT stocks are actually under pressure, largely because of overnight developments that took place where, French IT major Capgemini went ahead and cut its guidance downwards, or revised its guidance for the year ending in December. And this is the second consecutive quarter of guidance, revision on the way downwards. They expect a degrowth of 2 to 2.5% versus a previous expectation of a degrowth of 0.5 to 1.5%, telling you that the cut is slightly deeper than what they earlier anticipated. On that note, what we'll do is we'll take your leave on this edition of Halftime Report. Wish you once again a very, very happy Diwali, your family members and your loved ones. On the other side, we'll have Business Lunch, take all the market action forward. The October series expiry in the second half of trade coming up for you. The Nifty's lost almost 7.5% this series.